This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujasek from Trend Spider. We have a
breaking news. All right, what is up, everybody? Welcome to another episode of Benzinga Live. As you can see, I'm joining y'all remotely from my house in St. Louis. So not in Detroit, not in the office today at Benzinga HQ, but we still got a great show lined up for you. I've got my man. It's been a minute since he's been on the show. Downtown Nick Brown hanging out backstage. I think without further ado, because it's been so long and I miss having Nick on the show, let's just get him on right away and play that intro and see what Nick's up to. All right, Mr. Nick Brown, how are you doing?
AB, it is a wonderful day to join you. Happy Thursday.
Happy Thursday to you as well. So what is on the top of your radar? What's on your docket? What are the biggest headlines today?
Talking about recession fears, as we got jobless claims this morning. Everybody's talking about this new recession fears could be coming, ticking back up because claims jumped again, 261,000, highest since October 21. So going back a little bit. So there's not really much to talk about saying, hey, we're not going to get a recession. So this is going to be a little bit to fuel the market. Vital Knowledge points out this morning, too, what I just said. This kind of just fuels like the market. Oh, we could be coming back to recession. So we saw a little pullback yesterday in the NASDAQ. Not really too worried. I do think things did get a little bit overstretched, just a little bit. But I think once we get back on track, as we look at the data, we have a Fed meeting next week. So that's always in focus.
Yeah, and I mean, like you mentioned, we had the jobless claims this morning. The market actually trading, or it was actually trading like higher on this. I mean, what do you think? Do you think people are again scared about a recession like they were a few months ago? Like, what's your gauge on where do you think we're headed?
I think there's still a little bit of uncertainty of what's going to happen next week, if we're going to get a hike, if we're not going to get a hike. We have a lot of members that are having mixed messages. So, from the hawkish to the dovish, there's still not a lot of 100% guesses here of, are we going to hike? Now, we do know the CME Fed price tool is pricing in that there is going to be a pause. And there's a lot of difference between a pause, a skip, what's going to be happening. I think there's going to be a skip for the June meeting. I think there's going to be a hike in July. But there's been some talk pointing out that when we get the CPI in June and July, that inflation could be seeing a two-handle very shortly. Now, I'm not over sure that we're going to see a two-handle this month. I may think we may see it August, September-ish, but you never know. We could get that two-handle anytime soon. If we do get a two-handle, what does that mean for markets? Do we break out 4,400 on the S&P? Do we close out with some new record highs? What does that all mean coming into this meeting and coming over the next few weeks with gas and oil prices coming down? There's a lot of uncertainty here that I don't think that we've been focusing on a lot, or we're maybe kind of just putting it behind the bandwagon, or we're just taking it day by day.
Yeah, I mean, and I think like you have both sides of it right now, Nick, because you have the side that might be spooking some people if there are signs that the economy is heading toward like maybe a mild type recession. And obviously, some investors won't like that. But the flip side is that the Fed will be able to, stop raising rates or be able to even cut then eventually if that is the case. So I think if you're bullish right now, you can look at it either side and say, okay, if we are heading toward a mild recession, that's fine. We've needed it. We're going to end up cutting rates from here. We've been looking for that. And a mild recession should also help bring down inflation. Obviously, like the flip side too, is if you're bullish and you want the economy to remain strong, you can say, look, people have been calling for a recession for the past 6 months, for the past year. It hasn't happened. The economy's remained strong. And that's why we're in this spot where interest rates can and are going to remain higher for longer than initially anticipated, is because the economy has been stronger than initially anticipated. I mean, a lot of people thought that when the Fed started raising rates, whether it was Jeffrey Siegel on CNBC or whoever, like was saying like the Fed's screwing up, they're engineering us into a recession. And really, like, that didn't happen. We haven't seen that. And so like, I think a lot of people have been surprised that we've seen economic growth, we've seen unemployment go down while inflation's gone down. I mean, for a lot of economists, that's like a Goldilocks scenario. They would tell you, no, you can't have inflation go down if unemployment's also going down. But that's what we've seen. So, I think what I'll say about the whole thing is that I just think if we do end up looking like we are heading towards some sort of, like, I don't think that's necessarily, it's like a stock, Nick. If you think about a stock that's been on an incredible run, like an Nvidia, take example. If an Nvidia goes up 150% and then 1 week it's down 5%, it's like, oh my God, it's not the end of the world. It's like sometimes these stocks need to have a little bit of a healthy pullback, need to have a little bit of that sell off. So I see the overall economy kind of the same way. Just if we have a tiny little pullback at some point doesn't necessarily mean, okay, the wheels are turning off, we're all screwed.
I was going to say, just minutes before we come on air, there was a headline that just dropped that said VIX hits new 2020 low, 1376. So the volatility index for the S&P continues to shrink. And what does that mean? Does that mean that the data is coming in better than expected, or it's holding up and market's going to continue new highs? You can't come in every day into the office or work from home and say, oh yeah, market's going up. We can't live in that world here 5 days a week. You have to have a pullback every once in a while, because the bears are eventually going to overtake and then the bulls somehow take back. There's this debate that I think that the Fed and Chuck Todd, I don't know if you saw that, but Chuck Todd is stepping down as Meet the Press moderator. He says it's better to leave too soon than leave too late. And so what's the Fed doing? Are they raising rates, too early? Are they raising rates too fast? Or are they trying to do it before a recession or whatever's coming, before it's too late? And then somehow when it's too late, we're still going to blame the Fed. Oh, yep, Fed didn't raise enough. Fed didn't raise earlier enough. You got to blame them. So how do you go about saying, do we have a pause? Do we have a skip? There's still this debate that who knows what it's going to be. If we skip for July, or we skip for June, we hike in July, and then we look to see what else happens through the rest of the year. And then I think one of the meetings coming up, September, I think, there's the one meeting that we get the dot plots, like we get them again. So it's going to be interesting to see what the median dot plot is for inflation.
Yeah, and I mean, just going back to this, idea that maybe people are now more scared that we're heading toward a recession. We had the initial jobless claims, the highest they've been, I think, since October 2021 was the number that I saw. We also had this headline. This is on Benzinga.com. I'll just pull up the article real quick. So this is from Jeffrey. I hope I don't screw up his name. Gundlach.
Yeah.
Jeffrey Gundlach, who's like, for all intents and purposes, like kind of like the go-to bond expert. Like he knows. And one thing, so they actually talk about this in the Big Short book, where Michael Burry and some of these other investors on Wall Street at the time. I think the guy, I forget the guy's name in the book, but the guy who Steve Carell's character plays in the movie, the bond market dwarfs the equity market. Like there's way more total money in the bond market on Wall Street than in the equity, than in the stock market. So basically in the Big Short, they talk about how like the real, big boys on Wall Street are all like bond traders. And that if people like really want to know what's going on in the economy, look at the bond traders, because that's where the most money's moving. That's what has the most impact. The equity market it isn't as big. Again, this is from the Big Short in 2008. So if that's changed, I don't think it has, because I think the bond market was like way bigger than the stock market. But anyway, my point is like I don't take it lightly what this guy Jeffrey Gundlach has to say, because he is kind of the go-to bond expert. But he says pretty clear the U.S. soon to be at the front end of a recession. Double Line Capital CEO Jeffrey Gundlach reportedly said on Tuesday it looks increasingly possible the U.S. will tip into a recession. It's pretty clear that we have the look of soon to be at the front end of a recession, Gundlach said. He added that indicators, including ISM new orders and the Purchasing Managers Index, appear to be signaling a downturn. So this is some of that kind of manufacturing data that I think a lot of people like to look at real time, because otherwise, if you're not looking at this data, a lot of stuff are lagging. A lot of data points are lagging indicators. So when you see a company report earnings, okay, that gives you a look into how they did the past quarter. But looking at some of these things like ISM, could help investors get an idea of, okay, what's going to happen in the next quarter and the next. So the famed investor and bond expert pointed out that the ISM supplier delivery delays are near their lowest levels in 30 years, showing greater supply than demand, which further shows signs of a weak economy. We all know that if there's more supply than demand, that should lower prices, which again is good for inflation and could end up meaning that the Fed is able or needs to cut rates. He also highlighted the inversion of the 2-year and 10-year Treasury note yields, where shorter dated bills yield more than longer dated ones, indicative of the chances of a recession. All right, Nick, what are your thoughts so far?
That's funny because Goldman Sachs in a Monday note, he says the complete opposite. They lower their odds within a recession within the next 12 months. They go from 35% to 25%. And Goldman Sachs economist actually who wrote this, Jan Hatzius, has two major factors for the decline of why they lowered their recession odds. And it's one, because the apparent end of the banking crisis triggered by the collapse of Silicon Valley Bank and the recent bipartisan debt ceiling bill. He also noted in that article, or in his writing, the U.S. economy has cranked out, quote, large number of jobs while keeping the unemployment rate very close to its pre-pandemic level, end quote, of 3.5%. And while the job market is still strong, Hatzi has said that a slowdown from the torrid pace of hiring earlier this post-pandemic recovery may actually help inflation come down to stable levels. So it looks like we have bearish Gundlach and we have bullish Hatzius. Who do we take? Which side do you take here?
Yeah, and I mean, I think one of the keys there, Nick, is to keep in mind that for the Goldman Sachs, I mean, they're still saying that there's a 25% chance. That's not nothing. I mean, that's a 1 in 4 chance. So, I mean, here's the thing is I don't, like I said, the way I see it, until we get to this recession that Gundlach thinks is coming, again, even if that happens, I'm still not really worried. If the recession ends up being, worse than expected, obviously that's not good. But again, just okay, because think about, again, like, what was it, a year ago, maybe a year and a half ago, we were having this debate. Was it a recession? Because we technically had 2 negative quarters of GDP. But throughout those 2 quarters, we also added jobs. So it was like, all right, sure, maybe in terms of like your technical definition of 2 negative, quarters of a GDP in a row. But for all intents and purposes, it didn't feel like a recession, right? People were still, we added jobs. There's really no other recession in history that you can go through that, we were adding jobs instead of losing jobs. So if we see something kind of similar to that again, like just 2 negative slight GDP quarters, and then, the Fed's like, okay, inflation's come down a little bit, we can start talking about cutting prices or cutting rates. Then all of a sudden the market responds really well to that. So I don't, obviously recession, bad word when you're talking about the economy, the worst word probably that you can, say. And I think a lot of people that lived through the Great Recession of 07 and 08 still kind of have that bad taste in their mouth, because the U.S. economy has been absolutely like unreal over the past 15 years, really since that recession. But I think a lot of people still remember it's not that far away to remember like things weren't always this good. They can go south pretty quickly, as we've seen. So I think from an investing standpoint, anytime you have these type of recession fears, it's going to spook off a lot of people, just because, again, that wasn't that long ago.
Right. We're still going to have to watch the data as we get another CPI, I believe, next week. And Morgan Stanley points out that for next week's CPI, quote, we think the data will not meet the bar for a July hike, and the Fed remains on extended hold until the first cut in Q1 24. I like how they use the word hold instead of a pause, a skip. So Morgan Stanley is trying to argue the other side, saying, well, you never know. We could get some data that may push the bar, but we don't think it's going to get to those levels. But they're still arguing for a cut in Q1 24. Do we think somehow the Fed starts cutting in Q1 in 24? Is that still reasonable to think?
Yeah, I mean, it again, it'll depend on all this data that we get coming out. I think the Fed is looking to be a little bit more data dependent here. So, it should be. We'll see. But Nick, I want to move on real quick from the interest rates and recession fears real quick to the other probably biggest story of the week so far this week. or at least one of the biggest stories of the week. I don't know if it's the biggest. I think for a lot of people, it's top of mind just because Wall Street's obviously in New York City. But these Canadian wildfires that are pushing smoke, not just, really in New York City, but all around the country. I actually saw, Nick, in your neck of the woods, there was a air quality warning in Philadelphia.
Yeah, I'm in Pittsburgh. It hasn't been too bad just yet, but we are worried late tonight we're going to get a gust of this air that it could potentially look like New York City. And President Biden has issued orders sending some more firefighters to Canada. Bloomberg pointed out with an article this morning that this could last till Tuesday, but then you have to go for the further question is, could this last even further? How far is this going to go? I know New York yesterday was just, it looked like nighttime. It looked like midnight at like 8 o'clock in the morning. And it was like, and we're going back to masking. They say masking works if you have the correct mask. Now, depending on your area, I don't know how bad it is, Aaron, but my area, it's not so bad. But New York, I mean, we saw some flights being delayed, saw ground stops again. So it's like another thing on top of recession fears.
Uh-oh. Did I lose you, Nick?
No, I can hear you. Can you hear me?
Okay, good. I think my Wi-Fi just cut out for 1 second. This is what happens when I'm not in the office HQ. But hey, we'll persist through it. But yeah, I mean, so for me right now, like I wrote an article yesterday about the fires, and like honestly, like if they persist, if these problems persist, there are stocks that could benefit from this. And it's like, I don't like to do this when there's something bad going on to like think about what companies benefit. But 3M stock was up a lot yesterday. I mean, if you think about the companies that produce this PPE equipment, this protective type equipment for not just people that might want to, protect their respiratory systems while they're breathing in this potentially harmless air, but also the people that are going to have to, like be fighting the fires, be trying to do like cleanup on these things. So definitely it will be like a big effort, I feel like, to as this story goes on. But right now, I think experts are saying that expect in like New York City for the smoke to persist at least through the weekend. So that's why I think this is going to continue to be a big story for the next few days, just because I don't think it's going away overnight.
No, it's going to be a while just to see how big the fires are. Are we going to be able to get to fight it? Like, what are the conditions up in Canada? I mean, because if it's windy, I mean, these fires and this smoke is just going to continue to spread, and you're going to have to look at environmental factors, how the wind blows, who's going to get it, what's in the air, like what's in that fire. Are there chemicals that could, like, there's a lot of factors here that still have to be thought about.
Yeah, 100%. Leon Anders in the chat making a good point. This is a good way, a good positive, like I kind of had a pessimistic, I guess, view on it where I'm like, I don't like when there is something bad going on, right? This natural disaster, to think about what companies benefit, what stocks are going to go up. But Leon's saying, yeah, but if we give the money to the companies that can help us recover, like, so basically these things are going to happen anyway, these like natural disasters or whatever. There are companies out there that make products, that do services that help us through those things. So it's not a bad thing that these companies get rewarded for helping, like solve these issues, these environmental problems when they happen. So I think that's probably a healthier way to look at it. All right. So what's happening here? So Leon, so there's a big wildfires that started in Canada. I think they've been going on for a couple weeks, but a specific fire started like a week ago. I want to say June 2nd. And the weather patterns, the wind, are pushing a lot of this smoke. I mean, they're big fires, hundreds and hundreds of acres. Canada has a lot of trees, very, sparsely dense in terms of population outside of like the big cities, your Quebecs, your Vancouvers. There's just a lot of forests and trees. So a lot of those trees are burning in Canada. The wind is now pushing this smoke down into the United States. In New York City specifically, I think is seeing like the most. But even here, I mean, I'm down in St. Louis, Missouri, and we had an air quality warning because of this smoke yesterday. And I think, it's making the air, not just the air quality poor. In some places, the air quality is becoming hazardous. School districts are canceling outdoor activities. Local governments are telling people to limit their time outside. They say, okay, if you need to do work outside on your lawn or something, try to, limit it or do it later in the day when the air is not as bad. So it's a serious thing because, kind of similar to COVID, especially for either really young people or really old people with, comorbidities or respiratory problems, asthma, things like that, it can be a big problem.
I was going to say Google issued, I think it was yesterday or the day before, Google issued an alert for all East Coast employees to work from home because of the fires. And then there was a report this morning out of the Wall Street Journal, saying Google was cracking down on people not returning to the office 3 days a week they're not scanning their key card. It's like, hey, let's show up on a Friday, Aaron, and then we don't show up for another week in the office. But it's like, how do we return to work with not only environmental factors, but then, with we have AI now. AI could possibly be taking jobs pretty soon. You never know. Next year at this time, it won't be me and you. It will be an AI of each other. So we may not actually be doing the show next year.
Because of AI, you're saying?
Yeah, because of AI. We may be replaced with AI.
We'll see. I hope not.
But, and we argue because it's how do we get back to work in the office? We continue to see that office capacity is not going up as better than expected. They thought people were going to be back in the office in the summer. A lot of people thought they were going to be back in the office next year, and now it's being pushed back. We have these fires. We're issuing warnings that you can work from home, but then on the other hand, you say it's a nice summer day. Let's get the people in the office, and they're slacking. They're not showing up. How do we argue this? How do we argue the point where how can we retain employees back to the office? You give them the free coffee, the free donut. I mean, how do you do this bull and bear debate of work from home versus work in the office?
Yeah. I mean, Google, I don't know if you saw today, I think is urging, people getting back into the office. I think it'll be that's kind of where we're headed. It seems like I think a lot of companies are trying to do what they can, but it's tough because now I think from an employee standpoint, from like the labor standpoint, I think employees do have a little bit of leverage here where they've said like, hey, look, we've worked from home for the past 2 years. We've got our job done. Like, there's no reason we should have to be back in the office 5 days a week. I mean, personally, for me, the work from home thing, like a lot of people and a lot of my friends love working from home. I have friends that never go into the office. They just work from home every single day. For me,
that's me right here.
For me personally, and I'm back home in St. Louis right now. When I first started working for Benzinga, I worked from home for every day. And it's, to have that ability is great. 2023, crazy. We have this technology. You can do a whole job just sitting at your house with your computer, Zoom, all these things. But for me, I get a little bit antsy just sitting in my house for, 12 hours on the day, whatever. So in Detroit, when I'm in Detroit, even if I could do this from my house in Detroit, I go into the office every day just because for me, I like kind of having that separation. When I'm at work, I'm at work. When I'm at home, I'm at home, even though sometimes I do end up doing some work at home too. But for me, I think that provides me I just like it better. So like if Benzinga said everyone back in the office every day, I think there'd be a lot of people that would be upset, and I'd be like, well, I'm already in the office every day, So I try to see both sides of it because I do think probably there probably is some bet. I think when people work from home, are they really, on their computer working their full 8 hour? Like, no, you go for a walk or you go grab lunch. I think it's a little bit easier to take some of these times for yourself. Whereas then you're in the office, it can be maybe a little bit more productive. But I don't know. We'll probably need to see more data as that comes out. So we'll see.
Yeah, it's going to be very interesting to see how we get people back into the office. Are they going to have to lure with a bonus? Like if you come into the office 3 days a week, you're going to get this amount. If you come in 5 days a week, we'll give you this amount. But I think Bloomberg ran a story the other day, a few weeks ago. They were talking about the coffee. The office coffee was luring people back into the work, and I'm like, not really, not for me. I can make coffee at my own house, and it's better than what the office has.
Yeah, I think there could be, I don't know. I was thinking about this the other day. I wonder what incentives companies could offer, Like I was thinking about what if a company was like, you got a lunch stipend if you came into the office. So you come into the office, you get $20 a day you can spend on lunch versus if you stay home, you don't get that lunch stipend. Like I think stuff like that where like, they might not be able to, if companies are trying to incentivize coming back into the office without just making it mandatory, I think stuff like that, you could see some stuff like that. But I don't know. I think interestingly, I do think we probably will see more of a reversion to the norm where like, I think for a while people expected, okay, work from home, COVID, things are never going to be the same. Like the whole workforce is now like work remote or hybrid. And you still will have a lot of people in a lot of jobs that people like continue to do remotely. But I wouldn't be surprised if in like a year, 2 years, 3 years, we're talking about it. Like, remember when everyone was working from home and like everyone's going back into the office? I don't know. Cause if it'll depend on what the data says. Cause we don't know. I mean, this is the first time that millions of people started working from home. So we don't know the impact on that. We don't know the impact on productivity. Productivity could have gone up. From what we've seen so far, I don't think that's the case, but it definitely, I mean, things changed and they will, be different for remote work for a long time. But I wouldn't be surprised if we see basically like most people back in the office in the next year or 2 years. The commercial,
yeah, it's going to be very.
Go ahead.
I'm going to say it's going to be very interesting because a lot of people, whenever employer says you can work permanently from home, they've moved across country. And it's like, if you're coming back into the office, if you're being mandated, how are you going to move back across country?
That's a really good point. That's a really good point, Nick. So I think for a lot of companies that are, doing kind of in-person work requirements for people that live within like a certain distance of the office, for Benzinga, we have some people like yourself that aren't even in the state of Michigan. But then if we wanted to do like 2 days a week, you have to be in the office. It's like only applies to people that are in that Michigan area. But that's kind of unfair, that then you're like, okay, well, if I don't want to go in the office, but I happen to live in Michigan, you're saying if I just move away, then I don't have to go in and I'd still be making the same, like some of these things, don't make exact sense, but I think it'll be a interesting thing. I mean, so you're you're not in Philly, you're in Pittsburgh, right?
Yeah, I'm in Pittsburgh, and
that's still a right state. So I was right when I said neck of the woods talking about the smoke.
You were right because we have a lot of flights from Pittsburgh International Airport to Philadelphia, and it's going to be very interesting to see tonight if the FAA issues any kinds of warnings for Pittsburgh. I'm not going to say I'm home with Pittsburgh Pirates because, they're not doing so great. So I want to sound like, hey, I'm in a state with a great team. But let's transition to GameStop earnings. I don't know if you saw those yesterday.
Yeah, let me go ahead and pull that up.
They missed on the top and bottom line. GameStop, and there was no conference call. There was no guidance. It was kind of a weak report. They fired the CEO. So it was a good day after all. GameStop reported earnings of 14 cents a loss per share. Analysts were expecting 12 cents a loss per share, so they missed on EPS, and revenue came in at $1.24 billion. The estimate was for $1.36 billion. It was a miss on the bottom line. The stock loss dropped 25%. I don't know what that pro is showing. I can't see it on my screen, but it was down when I last checked. There was no conference call today. They unexpectedly canceled the conference call. There was no guidance. Not many companies, not many analysts cover this. The only one I can remember is Michael Pachter of Wedbush. He has a $6.50 price target on GameStop. And it is very interesting that Ryan Cohen was promoted yesterday. They fired the CEO again. I don't know about this company, Aaron. There is some concerns with this company, how you have another CEO. Like the management team is just in and out periodically.
Yeah, I mean, this has been a stock. Like I haven't been in this stock or anything for a while. We did see some, what was it that Ryan Cohen's going to be taking over. So I there probably will be a lot of investors that have that confidence that Ryan Cohen's able to turn things around. But I mean, Ryan Cohen came into GameStop in like 2021, and he had this kind of promise or ambitions of the truification, bringing GameStop to like the 21st century, all this stuff. And it hasn't really happened much yet. I mean, I don't know. Like, I don't follow this company, but I don't see GameStop fundamentally different as a company than it was 2 years ago. And I think a lot of people, when Ryan Cohen first came in a couple years ago, a lot of those people were anticipating that GameStop would look fundamentally different because of Ryan Cohen's leadership, because of new things that he implemented. And I don't think that, has really come to fruition. I think GameStop is largely pretty much the same company as it was. And as you can see from the chart, I mean, like, yeah, you had this crazy short squeeze. We came all the way back down, went back up again. I mean, GameStop went to, I thought it went to like $300 at one point. Either way, it's still trading a lot higher than it was pre-COVID. I mean, GameStop was trading from, $4 down to, I don't know, I think this is like split adjusted or something. But either way, if you look at where it's trading at now, $20, still significantly higher than it was pre-COVID. And that's kind of concerning to me because I don't know if GameStop, again, is fundamentally any different or is really making that much more money or is in that better of a position as a business than it was when it was a $4 stock before COVID. So, I know a lot of people, Michael Burry, Deep Value, like saw inherent value in this stock when it was at $4 and was buying it up. But now I don't think it's as exciting anymore.
No, it's not because, we haven't heard much of the meme traders haven't been. This stock is not really covered by many analysts anymore. This is another stock that's going down the tubes that in the long run may end up doing farewell, may end up, just being steady. Like you won't see much movement. I don't know what else to say on GameStop because when you have no conference call and you have management in and out periodically, I don't know how you can trade or buy a stock like this when there's really no fundamentals of what this company and how this company is doing. If it misses on earnings, abruptly fires the management, no conference call, I don't know.
Yeah. I think didn't AMC report earnings as well, and those were not good.
I didn't see AMC yet. I was off yesterday, so it was a good day to be off because there was a lot going on. But if we could transition, another story that I really think is getting a lot of attention is Warner Brothers Discovery in this debacle, in this CNN firing the CEO Chris Light after missteps. Warner Brothers is now. How do you buy into Warner Brothers? What do you see for the company? How do you go and value Warner Brothers after the CNN debacle and now they're looking for a new CEO? They need a new business strategy. How do you price Warner Brothers into the equation?
Yeah, I mean, that's a good point. I don't know. I mean, where do you think right now? I mean, like Nick, just in terms of the overall like movie industry. I mean, go ahead and pull up AMC's chart right here. I mean, like, have you seen any movies this summer? Are you excited to see any movies this summer?
No, I gotta be honest. I'm really not a big movie fan. I was at a movie theater back way before COVID hit near me, and not many people showed up at the movie theaters. So the theme parks and the movie theaters this summer, I don't know what the great debate is to get people back to the movie theaters because you can buy movie theater popcorn for your house. You can have movie theater drinks in your house. I don't know what the big great debate is. Oh, let's get back to the movie theaters. We're so excited. I would rather go see a Broadway performance than go see a movie, to be honest. I would rather go to Broadway or to go see musicals that are in my style, that I've known for a while, instead of movies. I don't know. Movies just don't get my attention. That's just me.
Yeah, I mean, that's completely fair. I think for a lot of people, like you said, that shift might be one that stays, is that people are okay and content to watch a movie, just at home now. And you can, like you said, make some popcorn, get all those benefits that you would get from going to the theater. But I think there also are, on the flip side of that, a lot of people that are kind of like diehard movie people that will argue and fight with you and tell you that the theater is like the best viewing experience. Like certain movies you have to go to the theater for. So I think, I don't know what the future of like movie theaters really looks like. Other than, it just, to me, like if I'm putting my money somewhere, if I'm buying shares of a company, if I'm investing in a stock, I want growth. And I want companies that are growing. I want industries that are growing. And if you ask me, like, do I think the movie theater industry is going to be growing over the next like 10, 15, 20 years? I'd say no, probably not. It'll probably look a lot different, but I don't think that'll mean it's growing in terms of revenue or whatever. But I mean, like content, movie type stocks, Netflix has been on an absolute tear, up again another 1.6% today, now above that $400 level. Looking at a daily chart here of Netflix, it took out this resistance level kind of up here at 395. You got to go all the way back to February 2022, which was right ahead of that of Netflix's second consecutive poor earnings report that brought the stock then from down 222 to like 170. And I remember, Nick, when this happened, I mean, Netflix, you can see here, just went on an absolute tumble from 700 down to 180. But on both these drops, I remember thinking, like, this is getting kind of cheap, but still no one wants to touch it. And now, I mean, hindsight's 2020. It would have been a great buy to be buying it down here at 177, 170, or 181 and be scooping up shares down here. And the stock's more than doubled since then. But at the time, no one wanted to touch it. At the time, it looked like Netflix had these like fundamental problems with its company that was going to bring the stock down to zero, whatever. And so it's funny now looking at it, just how strong it's been. What do you think about Netflix over the past few months?
I think it's a good stock because we're seeing a lot of movies premiering on Netflix. We're seeing a lot of the streaming bundle. So really, you're paying. You could get a bundle, Netflix or Max. I'm about to call it HBO Max because that's still what I refer to. But HBO or Peacock, Max, Netflix, Disney Plus. There's so many streaming devices, streaming wars that you could actually buy that would be good for long term. And you can even argue that even if the movie isn't premiering on one of the streaming devices, you could probably still find it on YouTube and rent it or buy it at a very low price instead of going to the movie theater and buying all this popcorn, all these drinks, where you'd be saving less money at home. It's the streaming platforms that I do think that are never going to go away. I always think they're going to have growth. And, Netflix is always this company where every quarter we think, are they going to add subscribers? What are they trying to do? The one thing I do think that is going to hurt this company, Netflix, in the long run, maybe even the short term, will be the crackdown on the sharing of the passwords outside your family. I really do think that's going to be a problem for this company, given you have a lot of people that like to share Netflix accounts just because they like to watch some of the same shows. They like to watch, like they're similar in people that they like the same shows. And so it's like, instead of having the one person buy it for their whole family, they can just share the password and it's much easier.
Yeah, Netflix, that's been one of their big talking points for a while now. And I think I actually haven't tried. They might have already started. Like, I haven't tried to log on to Netflix because I was on my mom's account. So when I'm in Michigan and she's in Missouri, I don't know if I'm going to be able to get on anymore. I will say I probably won't end up buying a new subscription if I do get kicked off, just because I think there were only a few things I would log into Netflix to watch every once in a while. I also actually tried to cancel my HBO Max subscription. It was like $15 a month. And I went to cancel it just because I wasn't using it all too much. And then they were like, we don't want to see you go. And we're like, what if we give you 3 months for $5 a month? And I was like, all right, fine. And I know exactly what they're trying to do is that then I'm going to forget to cancel it in 3 months. Then it's going to start charging me 15 again. I already know this. It's going to happen. But I did take the deal because I was like, oh, that's actually a good bargain, right? $15 for 3 months of HBO Max. That's a good deal. So pro tip out there, if you want to save, $10, just threaten to cancel your HBO subscription. I'll offer you a deal.
Yeah, but it's very interesting because past few weeks, we have Xfinity Comcast in my house, and we just got notice that because we have Peacock, we get the Peacock premium that you don't have to pay. We just got a notice that June 26th, you're going to have to now pay for Peacock. And the annoying thing is they're putting MLB games, Major League Baseball games on Peacock every once in a while. So if you don't have Peacock, you can't watch your favorite sports team. If they're on Peacock, you got to pay, I think $199 a month or $499 a month, or whatever like the deal is. And that's just frustrating because there's a lot of older people that they don't know what Peacock is. They don't know what Netflix is. And you're trying to rope them into more money when, streaming is already expensive enough.
Yeah, it's insane. All right, well, Nick, I see our first guest hanging out backstage. I'm gonna when I get a sign that my man Rob Roy's ready, I'm gonna go ahead and bring him on for a few minutes. And if you could either hang out, you can hang out backstage. I'll pop you back on once he's over, whatever you want.
I'll stay backstage, listen to the conversation with Rob, and we'll go from there.
Sounds great. All right, Nick, we'll talk to you in a few.
Yep, talk to you in a few.
All righty, guys. We are going to bring on our first guest, because Nick Brown, I'm going to go ahead and make this clarification, not technically a guest today because he's my co-host. So our first guest of the day, we've got Mr. Rob Roy going to join us. We're going to be talking some charts, talking some fib levels. Without further ado, let's go ahead and give Rob that very special Zinger Nation welcome and see what Rob's been up to. All right, Mr. Rob, how you doing? Uh-oh, old mute trick. It's okay, guys. Be nice. This is his first time on the show.
Yeah, I've never done it before. Never done this before, so it's brand new to me. How you doing, Aaron?
I'm good, man. Back home in St. Louis, Missouri right now, seeing some family, so that's always fun.
Nice.
How about you? You're up in New York?
I am. We're just hocking up lungs here with as bad as this air is by us. It's terrible.
Getting smoked out up there?
Today is not as bad. Yesterday was really bad.
Yeah, I was looking at this here. I'll pull it up real quick just because I already had it up, so it'll be easy. This world, it says the IQ air quality and pollution city ranking. So this is like updated daily. So right now it says that New York City has the worst air in the world. Yep. And Detroit's actually up here too. Detroit right here, number 12, right behind Shanghai, I think is also seeing some of this smoke. But Rob, so this rating right here, it says 173, which is in this unhealthy rating. Yesterday, for a while, this was in the 300s. This was in the hazardous rating.
Absolutely, it was bad.
So it does seem a little bit better today. Is it? I assume you're probably keeping up with it a little bit more because you're in New York. Is it expected to get a little bit better each day now, or is it really like you don't really know what we're gonna get?
They're saying we're going to get different pockets back and forth, but without a doubt, I mean, I was in my car yesterday and it was hard to breathe. And I had to take my mom, who has asthma, to a doctor appointment. And yeah, that was horrible. That was horrible. And, so breathing was bad there. I was actually working outside today, doing a little bit in the front of the house, and didn't really notice the smoke too much at all. So I really wasn't coughing or choking on it or anything. So it definitely is better today than it was. And I've seen that chart before. The only thing about it is New York is normally like 4 in the world or something. We have horrible air over here. But it's not fun.
Well, stay safe. Hopefully there will be some, that the smoke will start subsiding and the air starts increasing. Because like you said, I mean, for a lot of people, whether people with asthma, people with other respiratory problems, like it can be, air quality, I feel like, is one of those things, Rob, where we don't really think about it too much until it starts going downhill, and then you realize how important it is.
Then you're in trouble. Exactly.
Yep. All right. Well, Rob, what when we go ahead and pop up your charts, and let me know what we're looking at today.
Sure. So took a trade on Adobe. Aaron, you're very familiar. You've seen me show the system before of how we trade. We closed down here yesterday. We gapped up today. Ran above that 425.95, which is our fib level. It's a fibit level, actually, is what it's called. And we're looking for a retest. So if we go over to Adobe on an intraday chart, and you can see the 425.95 line right here, the one that's got the dots on now, the lower of the two, that's a 5-minute candle that we're looking at in there, right? So we didn't retest anywhere. We just blew through on the 5. So we're going to go down to a 1. Right, and you'll see we pushed up first candle. We got right up underneath that level. We closed just above after stretching up to a high on that first candle of 428.5. So we had a really nice move and then a retest the following candle on the bounce, and we were in on that third candle. And our resistance is at 438.53. So on a stock that's over $300, we have a general rule on one of the programs, one of the systems that we trade, that we're looking at $2 below resistance is a given. If we can hit that throughout the course of the day, we're out, which puts us at 236.5. and we had a high right here at 236.90. So we were out at 940. Was it 42? Yeah, I've got it written down. 942 out of that trade today. That was the really nice setup. Worked well in about 427. Out at 436. So we did well on that setup.
Yeah, wow, that's a great trade. I saw a fun kind of stat about Adobe. Well, it's not really about Adobe as much as about Apple, but did you know Apple has enough cash on hand that if it wanted to, it could acquire Adobe outright? I think Apple has like $200 billion cash on hand, and that's like Adobe's market cap right now.
It is insane, right? What they've got available. And if this AI stuff takes off for them with this headset, I think next 5 years, they could be looking at a heck of a lot more.
Yeah, I don't want to, I've been trying not to make any big predictions about the headset because personally, I am not super bullish yet, but I also know for a fact that, people said that same thing about the iPod, and then people said the same thing about AirPods, and people said the same thing about the Apple Watch. And then every single time they end up being super popular and Apple does really well. So I don't want to say, oh, I think these headsets look silly and they're too expensive and no one's going to buy them, because it's Apple. And what's probably going to happen is everyone's going to buy one and they're going to be worth like $5 trillion instead of $3 trillion.
Right. So we don't know. But I do like to see that they're moving in that direction, in that space. It's really their first foray into that much higher priced product outside of their computers, of course, but that much higher priced product where, the phone is $1,000 and here we're looking at potentially a few $1,000s for the headset. Right. So we don't have a final number on it yet, but it could be interesting. Anything AI, I'm a big fan of. Anything right now, whether you're looking at what Apple's talking about, whether you're looking at NVIDIA, whether you're looking at AI, which, I threw a call out there yesterday on the stock AI of I was buying and adding to my portfolio on the stock. And I actually did a double dipped on the same position using the same cash. So when you look over at AI as a stock, right? So I had actually done, I did it the day before. It wasn't yesterday, it was the day before, right? On this big hollow candle. As we broke out of this 36.5 level, I went ahead and sold naked puts on AI. And then I also bought the stock and wrote covered calls at the same time. So I went to whatever my full allotment would be. Pretend my full allotment is 300 shares. So I would have gone ahead and sold 100 or 200 shares worth of naked puts and bought either 100 or 200 shares of stock and wrote the covered call and had, if I get exercise, I would have that full allotment in there. And it's done extremely well. I mean, AI has really sweet premiums on their options right now. Let's go back to a 5-minute candle. All right, so let me pull over an option chain. So if we were selling naked puts, Aaron, we're going to look to sell as short a time as possible. There's not much premium left in this week because it is Thursday already. But if we go and look for a 20 delta, delta says for every dollar the stock moves, this is how much the option moves. Okay. So if you have a 19 delta, an 18 delta, it says every dollar the stock moves, the option will move 18 cents. So if this stock goes up by $1, the 25-cent option, 30-cent option is going to drop by 18 cents in value. That's what delta broadly tells us. It also is a determinant of what the expectation is that the option will have intrinsic value, cash value, come expiration date. So come Friday, tomorrow afternoon at 4 p.m. Eastern, we have an 18% chance that this option will have any cash value to it at all. So you have an 82% chance of being right in this trade. So it's a probability calculator. Okay. Does that make sense so far, Aaron?
Yeah, it does. So you're going for that high probability, 82%. So you're selling the higher price one?
So all we did on this position is we sold on the options, right? If we just drop this down to one contract just to make it easy.
So no spread or anything, just selling the.
Not a spread on this, exactly. We just went straight out and sold premium on this to collect the premium. Sorry, go ahead.
No, I was just gonna ask. But this is covered somehow. So would you have to buy 100 shares of the stock if it hits this price?
So if whoever I sold it to decided they were going to exercise me, now what would make them do that? Well, the stock is above 35. Why would they make me buy it at 35? And if they did, and the stock was trading at 36, I'll buy it at 35 and sell it at 36. I'm okay with that, right? I only sell puts on stocks I don't mind owning. I don't want to do this just as a cash flow. I really don't have to want to own that stock as well. So on this, I'm going to need to have some cash available, usually about 25% of the premium of the strike price, rather, is what you're going to need to have. But it depends on broker. It could be 50 or 60%. Again, depending on the broker. So they paid me, in this example, I would get 28 cents, right, is what I would receive on that. If the stock stays above $35 between now and tomorrow afternoon at 4 p.m. Eastern, I keep the 28 cents. The option expires worthless. I go and look to do it again next week. For next week's options, I go find the 20 delta. And now I'm at the 32.5, and they're going to pay me 78 cents. So 32.5 versus 37, what does that give me? $4.50? Right? 4, 6, 30, 5.5, somewhere, $4.50, $5. So they're going to pay me 75 cents to buy the stock at $32.50 while it's trading at $37. And I continue to do that week after week after week.
Got it. So, yeah, I mean, it seems like that's a good strategy, especially like you said, on a stock you wouldn't mind owning. So this is we're talking about ticker AI, C3 AI, and right now it's trading at what, $37 about?
Yep, right around $37.
All right, yeah.
If you have to buy it, Aaron, then you sell a covered call against it. We're going to go find a 40 delta on the call side. They're going to pay me $1.60. I would have to buy it at $35, and somebody is going to pay me then $1.60 so they could buy it at $39. What a wonderful deal. Now, don't get me wrong. There are things that could go wrong. The stock could go against you, and now you're underwater on a position. It's like,
yeah, I was going to say, Rob, this sounds too good to be true.
And in fairy tale land, it would be if you look at every single time you're going to win. You have to manage these positions. There's no question to it. I am a huge advocate of this strategy for two different purposes. One, retirement accounts, because when you're doing covered calls, there are some tax laws. You got to check with your own accountants on this stuff, guys. But there are some tax laws that stop the holding of that stock, meaning your capital gains, where you go from short to long. If you have a covered call written against the stock, you basically put on hold that you actually own it. So if you had a covered call written for an entire year, and then the stock got sold, you would say, oh, long-term capital gains. Actually, it's not, because you had a covered call written on it for that entire time. It's still short-term capital gains. But if you do it in a retirement account, there is none of that to be concerned with whatsoever, right? So I love these in retirement accounts. The other purpose is whether it's a naked put, covered call, credit spread. I love them for asset purchasing. So I put a quick little, I don't know, maybe it's too small. Let me see if I can make the fonts a little bit bigger.
Yeah, I'll go full screen on it for you real quick.
Okay.
Here we go.
All right. So let's see. So what I said was, if you had $30,000 in a brokerage account, right? Cash in your account is 30 grand. And we looked at the stock AI. Right now, trading at $37 a share. And I'm not saying you should ever go and put all your money into one trade. I'm just using this one as an example instead of trying to build an entire portfolio out. So you buy the stock at $37 a share, $29,600, you could buy 800 shares of stock. We could sell it for about $1.40 for a full week of time. Right now, we have either 2 days or 8 days till expiration. So roughly, it's about $1.40 when I did the work earlier today of what we could get in premium. That's $1,120 a week that you could generate off of this stock. Now, will you get it every week? Will the stock always go in your direction? The answer is no, of course not, right? Absolutely not. But if you're talking about, I'm going to take 30 grand out of my account and I'm going to go pay for a car, right? And or I'm going to put an extra 30 grand down on the house. If you can get really good at one of these selling strategies, and I would not be doing this with a directional buying stock, buying call and put options. I wouldn't be doing that with this. This becomes a selling strategy. If you can get really good at this, Aaron, look what you're talking about. What if it's not $1.40? What if it's only 70 cents and you're only making $500 or $600 a month? That's a car payment without ever killing the goose that laid the golden egg. You still have the asset. You did not give it to the car dealership or the bank or whomever. You kept the monies to continue to cash flow it.
Yeah, I mean, I think these types of strategies that you set up, Rob, that are very, high probability, give you an ability to kind of, rinse and repeat over. I mean, that's the way that if you want to like make money consistently in the market, you have to do it. You can't try to go for like grand slams, hit these $1,000 calls or put options and think that you're going to be able to do that repeatedly.
Correct. We do a training every Monday, a free training that we do on our site. And I always ask in there, who did what in trades today? We have one of our students every week. He's got his email already, his text message already prepared. He drops it in Zoom for us. And he says, I did this as a naked put. I did this as a covered call. I did this and this and this. He does 2 to 4 or 5 stocks because his stocks closed on Friday. So he's out of all of those. The stock is freed or he bought more stock. And now Monday, he's selling his options against them again. And on average, he puts in, and we'll call it a paper trade, right? I don't see his account, but it's somewhere between $1,000 and $1,200 or $1,300 a week is what he's dropping in there that he's selling in premium every week.
There you go. All right, well, Rob, it's 12:30. We're running up on the clock here a little bit. Any other trades or things you would like to discuss today? Otherwise, I'll go ahead and drop that link, tradinglikeaboss.com, in the chat.
Yeah, so we're good. I mean, that was all I got off today was Adobe. I missed out on W Day. I missed out on my SPY trade today. It was horrible. But our MAR, we did the other we called that one out 2 days ago. We crushed it. Microsoft, we killed it on Microsoft for it. Actually, someone on our YouTube channel commented that they made $10 on the call that we made on it, which was outstanding.
Wow, there you go.
A lot of nice trades out there.
All right, guys, if you want to learn more about these different types of option strategies, learn how to, set up some of these consistent high probability trades, visit tradinglikeaboss.com. I think, Rob, you said everything on there that you have education. There's free education on there. So you have no reason not to check it out.
Correct. There's nothing on there that has any cost whatsoever, guys. It is all free training that we do on there. All of our free classes and such are listed there. So yeah, if you go and visit there, go ahead and find the items that work for you and check it out.
Beautiful. All right. Well, Rob, we'll chat soon next week. Till then, stay safe. Hopefully the air gets a little bit cleaner for you and have a great weekend.
All right. Thanks, everybody. Take care, Aaron. I'll see you next time.
Yes, sir. All right, guys, that was Rob Roy, tradinglikeaboss.com. Again, all the information and education that you'll find on there is free, so you've got no reason not to check it out. Always a pleasure to talk about Rob, see what he's been doing. All right, let's go ahead and bring my man Nick Brown back on the stream. Nick, how you doing?
Good. Just getting few headlines here regarding oil. Something on Gary Gensler. Just crossed the wires that popped up on feed. It says U.S. SEC Chair Gensler says crypto security issuers need to register the offer and sell of their investment contracts with the SEC or meet requirements for exemption. Trying to get more information on that. Also, while you were speaking with Rob, there was a headline regarding oil that's pushing oil prices, WTI, back below $70 a barrel. Apparently, Iran and U.S. near interim deal on enrichment in oil exports. That's according to the Middle East Eye. And direct talks between Robert Maley and Iran's ambassador to the UN have taken place on U.S. soil, sources say. But it remains to be seen whether senior officials back the proposals. And so that pushed oil back below 70. Last time I checked, it's like 69.77. And something someone pointed out here on Twitter that I thought it was very interesting. Rory Johnson, he does writing and charts at commodity text context. He says crude fell more on Iran headline than rallied on Saudi Arabia's 1 million cut. That just shows to you that OPEC has some kind of influence, but there's more headlines that mean a lot more than OPEC. And so I thought that was very interesting. NASDAQ up 1% right now. So right now it's an overall good day so far. I don't know about you, but recession worries still are in the cards. Bless you.
Thank you.
So there's still a lot going on, but this crypto thing that they're going after Binance and Coinbase, it's very interesting how this is all going to play out regarding the SEC and Gary Gensler, because you could also argue, well, I'm also arguing, Aaron, that you could also sue the SEC for fraud because they've been asleep at the wheel for a while.
Yeah, I don't know who would be doing that. That'd be a tough case probably. But yeah, looking here, like you said, USO, we'll check this out on a 2-minute chart. You can see here how the news here a couple minutes ago really impacted the oil price. Dipped here, came back up a little bit here. Again, we're looking at the USO, United States Oil Fund, XLE trading down a little bit as well. Financials trading down a little bit today too. KRE, the regional banking ETF, down 2% today. I mean, this is after a pretty strong run in the regional bank ETF. You can see right here. I mean, we were at $35 on this, up to 44, trading off a little bit today. Probably nothing too concerning there. But like you said, Nick, tech been strong today. Tech up, or Qs are up 1.25%. Yesterday, tech was your laggard, so tech coming back a little bit today, while energy and financials remain weak. All right, Nick, what else? Any other big headlines? We're probably going to wrap up the show here a little bit earlier today, maybe in about 5-10 minutes. So we'll just knock out some quick headlines, and maybe if you've got anything previewed that you're looking at or watching for tomorrow or into next week, just let us know.
Just recently, Alex Kantowitz of Big Technology tweeted moments ago, Meta will host its first in-person all hands today since early 2020. Big moment for the company. Watching all this play out with Gary Gensler and what the SEC says. Going to be watching the Fed meeting next week. CPI numbers. Going to be watching some eco data to see how this all plays out, if the Fed's going to hike or not. Other than that, it should probably be a quiet week. As we say, we're going to be watching the wildfires to see if the smoke continues. Other than that, I don't have too much on my radar. This week, the S&P and NASDAQ are tracking for, I believe, an overall higher week, and the NASDAQ is on pace for another week of gains if the gains hold today and tomorrow. Other than that, Aaron, that's all I got for today.
All right, Nick. Well, let's see. I'll let the chat, I'll give the chat a few minutes. If you guys got any stocks or things you want to chat about, let me know. Otherwise, like I said, we are going to wrap up a few minutes early today. Just got some things at home dealing with. And then our rundown for the rest of the day, we will have some swing trading with Money Mitch later in the day. So excited for that. Going to be tuning in. I believe that starts at 3 p.m. Eastern. And then, Nick, when's the next time we get to see you on the stream? Maybe next week? Are you done? Are you finished with school for the summer now?
Yep, finished with school. So maybe tomorrow, Monday, whenever.
Okay, well, so we're not going to be doing a Benzinga Live tomorrow. Next week, probably Tuesday and Thursday. So either of those days, you feel free to hop on. But yeah, man, I mean, it's great to have you on. Thank you for helping us break down some of the biggest headlines of the day. Great job as always.
Thank you. Excited to be back. Always wait for days to get off, for days for summer to end, so I can join you, as this all started last year and we're going to continue it this year. Hopefully going to be able to make it up to Detroit this summer. That's in the works, but I know I'll be back at the stock exchange week of July 10th. So I'll be in New York. Hopefully it's not too smoky.
Yeah, hopefully it'll be cleared up for them, but for you,
you never know. We just take it day by day.
Day by day. That's all you can do. All right, Nick. Well, enjoy the rest of your Thursday. We'll chat soon. Great job again on the show today. Excited for next week to have you on again. Everyone else out there, peace and love. Have a good weekend. We will not be live tomorrow. We'll be around though, Benzinga. I mean, we'll be doing shows tomorrow and whatnot. There'll just be no Benzinga Live. Till next time, happy trading. Peace and love.
Peace and love.